Let's start off with what we're seeing post the nationalization of 3 banks. News out is that Sterling Bank will be acquiring Equatorial Trust Bank. Has the market responded in any way to this news?
Yeah, I think it's responded well. It's responded well for ETB. We have to look at it in 4 perspectives, pro forma, post a transaction. We have to look at it from a size perspective, an efficiency perspective, a capital perspective, and a liquidity perspective. Size-wise, ETB Sterling, they're going to be 550 billion naira or something around that in total assets. And they're going to have at least 180 branches, which makes them a pretty large bank. They're going to be moving up, ETB is going to be moving up from a tier 3 bank to a tier 2 bank. Efficiency-wise, it's going to help them with optimizing their different ratios, their loan-to-deposits ratios. Right. If you look at it from a capital perspective, we see a rights issue coming in for the STB and ETB shareholders. So this is also going to be very good. And then from the liquidity standpoint, we all know Mike Adenuga owns Globalcom, and from a cash perspective, is going to bring his businesses to play. Globalcom, right. Con Oil, Consolidated.
Talking about Mike Adenuga, not him specifically, but one of the real sort of peculiarities of ETB is its focus on telecoms investments. And this is what people are saying gives it that leverage, that competitive advantage for Sterling Bank. How have shareholders responded? Because the fact that ETB is one of the non-listed banks that we're talking about here post this rescue issue means that it's a different kind of a consultation.
Yeah, I think shareholders have responded well. You look at the different acquisition targets Globalcom is looking at in the future. They're definitely going to grow their telecoms business. He's a proven leader. He's a proven success in different businesses he's gone into. So shareholders are definitely responding well. ETB and the Sterling merger, that kind of size and capacity and framework, there's nowhere to go but up. There's nowhere to go but up for them.
Okay, great stuff. Let's talk about results coming through. GT Bank, profits before tax up 24%, and I think it's indicative of stronger margins and better efficiencies within the bank. What do you make of their earnings?
I'm going to say all their subsidiaries have performed well. You look at their subsidiaries in the Anglophone countries, which is where they're focused, they've done well. You look at the subsidiaries which they just divested, they've also done very well. You look at the interest expense on the deposits, it's pretty low. And these 2 key factors have definitely played a key role in helping improve earnings so far.
But their profits after tax up 50%, so that's still a good figure. But there's something extraordinary here that we're told, an extraordinary item in the form of 2.2 billion naira through investments and disposals. Is that anything significant?
It's significant from a standpoint that the CBN mandates companies to invest 10% of profit in small and medium enterprises. And I think that's where this 2.2 billion disposal is going to. I think they've disposed some of the assets, disposed some of those small and medium sized enterprise assets, and that's what shakes that up. But from that perspective, it is important.
Okay, and then in terms of how they compare to other banks in terms of dealing with loans and deposits, they've been quite conservative on the loan front, only growing loans by 5%, deposits performing a lot better, but it seems as though they're a bit risk averse at the moment.
Everyone is risk averse. Everything's been going on in the market. Everyone is definitely risk averse. It's with everything that's going on with the nationalization, the recapitalizations. Everyone is definitely just trying to grow deposits. I think it's not only GT. I think it's a definitely industry. It's industry wide right now.
And as we're seeing a lot of consolidation on the banking front, are we likely to see anything exciting coming out of GT going forward?
They're still going to focus on organic growth. Organic growth is what they've done so far, and they're going to focus on that. From an international expansion standpoint, I had Segun Agbaje saying today that they're going to now move towards the Francophone countries, and they're just going to be a standalone international bank servicing their clients.
Okay, other results out, Dangote Flour Mills. Now, a 51% drop in profits. It hammered the stock today on the markets. What do you think is going on here?
What's going on is that Dangote has not Flour has not released results in a couple of quarters, and they've been suspended because of this. And you also look at the perspective, yeah, they had revenue growth, but they also had earnings losses, and that's definitely affected investor confidence in Dangote. And even though they gave 20 kobo dividends, investors are still not buying it. The 50% loss, 50% year-on-year revenue drop is definitely shaking investor confidence.
Like many others in the consumer goods sector and the fast-moving goods, they've also been affected by input costs. I mean, the wheat price, we all know what happened there, and their noodle business isn't doing particularly well. Is there any indication of a recovery strategy?
This is a personal opinion. I think Dangote is great with the distribution network, but with more marketing into play and different contracts for the wheats, forward contracts to hedge against different price fluctuations, I think they're gonna do well in the future.
Okay, and any other things we should consider in terms of market activity going forward this week?
Yeah, we saw a management change at Transcorp today, and that's a positive sign. It shows that Harris Holdings, that has come in and put in an equity, has taken an equity stake in this company, has started shaking things up, and that's positive for the industry. Also, UBA, I think, is very undervalued at this point in time, and around 4 naira, the true value of the company definitely speaks more to that. And there are a lot more companies on the market and banks on them that are going for discounts right now, and cheap valuations are a bargainer's paradise. So that's all I have to say.
Okay, and then just finally, Akinola, we do know that the market has underperformed, not because of the fundamentals in the market, but just investors internationally just holding back. What's going to lift the market? Because it's lost value of about 3.5% this year to date, and there is expectation that the market could recover above 7% this year. Do you concur with that view? And what would lead it to that kind of growth?
Yes, I think, like I said that last time I was on this show. Once the recapitalization is done, and just the reforms, once the reforms are done, I definitely see I see growth in the market. Once all that's taken care of, there's going to be growth in the market. Once the mergers are complete, once the new structure is set, once investors can see a clear framework, growth is going to happen.